So I want to get your take on the action we saw in the markets yesterday. It didn't seem to be driven by AI or the Fed. What do you think moved the markets higher?
Well, obviously, the news about Venezuela, we certainly can't ignore that. And just a reshifting of how we're going to play geopolitics along with the Fed and also the jobs report. So, a lot of different moving parts as we go into it, but maybe not so much about AI for once.
All right. That leads us to your word of the day. We gave you a hyphen, Aaron. We gave you a hyphen. It's regime shift.
Thank you, Frank. I appreciate that. Yeah, so I chose regime shift because I think it's very timely in what we're seeing in the global world. So it's not a regime change, but we are seeing regime shift within the equity markets, and we're seeing that shift from growth at any price into more of quality earnings. And so I think that's something that stock pickers and investors should really be focusing on as we go into 2026. That okay, the AI play has been done, but now we're actually going to be looking at companies that can deliver and can deliver with a reasonable valuation. And so that's where I'm looking for. And again, I am looking very much within quality mid and small caps, particularly the mid caps this year, where I really think you just get the absolute biggest bang for your buck going into this year.
All right. When you're talking about regime shift, you're not just talking about what's going on in South America. And I want to be clear. Did you say the AI trade is done, or were you saying it's cooling off? Because you're also talking about a regime shift from growth at any price to more of a focus on earnings and yield. So I want to go back. Were you saying the AI trade's done?
No.
Okay, I just want to be
The
clear.
AI trade is still there. It's just that it's not going to be the same companies that we're looking for. So it may not be the exact same leaders that we've seen a shift in leadership, a shift to companies that are really developing with the AI, but are being profitable. And also being reasonable about how they're spending capex. I want to see companies that don't have to go out to the debt markets to finance their spending, but have enough cash flow within to be able to pay for their investments.
All right. That gets us to your pick. It's actually in the metal space, another area that seems to be booming. The stock pick is ATI. Why this name in particular?
So ATI isn't necessarily the company that we all think of many decades ago. It's not your steel company. It actually supplies a lot of materials for aerospace and defense. So it ties into what's going on globally. They are basically the supplier to the Lockheed Martins, to a lot of the defense companies out there. They've been a really good company in being able to develop and be basically the engine room for all of aerospace and defense. And so they've shifted into producing those very specific, industry specific materials, but also they've been really good at cost cutting. So we've seen margins really improve. We've been able to see profits go up even while their revenues haven't grown quite as fast. And obviously now there's hope this year that those revenues are really going to boost and boom for 2026, as well as having those increased profits thanks to some cost cutting. So just a company that's really well poised, good financial balance sheets and financial statements, and also just being able to deliver quality products.